Did you know that the world's largest investment bank, Goldman Sachs, currently thinks Tesla is a great buy? Many investors, including Goldman Sachs, are still optimistic about Tesla shares and believe their investment will be profitable. To find out more, keep watching and listening. It is hardly surprising that Tesla has emerged as one of the most popular stocks on the market right now. Many others think that Tesla stock is worth every cent, despite several assertions to the contrary on how highly inflated the EV maker's shares are. Some even assert that the company's stock is actually cheap. You will learn today why it is the best time to purchase Tesla shares. Goldman Sachs says Tesla is a great investment, although Wall Street is growing increasingly optimistic about Tesla shares. According to Goldman Sachs, analyst optimism hasn't been sufficient to drive up the price. Goldman Sachs analyst Mark Delaney raised his price objective for Tesla stock to $1,200 from $1,125, despite keeping a buy rating earlier in the year due to concerns about rising interest rates. Tesla was listed by Delaney as a top choice for 2022. To profit from the greenflation trend and growing oil prices, Goldman Sachs selected Tesla and a number of other EV-related equities in March. Most equities have at least a 50% potential upside, according to the bank's experts. In reality, innovation in electric vehicles will continue to propel investment growth in 2022, predicts Goldman Sachs. Goldman Sachs declared in 2016 that the moment had come to purchase Tesla stock. Goldman Sachs declared in 2016 that it was time to invest in Tesla Motors following 3 years of telling investors to wait for the company. Tesla shares increased in early trading that year when the large investment bank raised its rating from hold to buy, keeping a $250 price target. The last time Goldman issued a buy recommendation for Tesla was in February 2013 with a $45.00 price objective. Goldman Sachs declares that Tesla stock is a great purchase today once more. A prominent international financial organization, the Goldman Sachs Group Inc., provides a wide range of financial services to a wide and varied clientele that consists of businesses, financial institutions, governments, and private citizens in the areas of investment banking, securities, investment management, and consumer banking. The company was established in 1869 and has its headquarters in New York, with offices in all of the world's major financial hubs. The goal of Goldman Sachs is to promote global financial opportunity and sustainable economic growth. With more than 150 years of expertise collaborating with the most successful companies, organizations, and entrepreneurs globally, we leverage our people and assets to promote our clients' success, increase personal wealth, and quicken global economic development. Over the past 3 months, Tesla shares have increased by 12%, significantly outpacing the S&P 500's decline of over 5% during that same period. Wall Street attributes the surge in Tesla shares to hope for new laws that will encourage the use of electric vehicles starting in 2023 and beyond. The bears have been decisively defeated by Tesla's excellent performance in the first 2 quarters of the year. Despite the stock's increase, Goldman Sachs analyst Mark Delaney thinks Tesla still has room to grow. Following a meeting with Martin Vicha, Tesla's head of investor relations, Delaney's analysis is presented. In keeping with it, Delaney projected a plus 22% rise in the stock price and set a price target of $333.33 along with a repeated buy recommendation. Delaney identified 3 key conclusions in this regard. First, Tesla's expenses are going to go down. In 2021, Tesla's automotive cost of goods sold per vehicle decreased from above $70,000 in 2017 to roughly $36,000. The cost of goods sold per car can trend lower over time, as Tesla benefits from the ramp of the Berlin and Austin factories and the decreased percentage of vehicles coming from Fremont, which is a converted ICE factory with higher costs than Tesla's purpose-built EV factories. This metric increased in the second quarter due to factory shutdowns, factory startup costs, and pressure on input costs. Basis for the vehicle, scale, and battery upgrades. Second, Tesla has won the act to reduce inflation. It's too soon to predict what effect the Inflation Reduction Act will have on Tesla. A lot will depend on the government's interpretation guidelines. We, however, point out that the IRA does work to promote an electric vehicle supply chain centered in North America, and that Tesla produces more locally than the average car company, with the Model 3 and Y being identified by media outlets as the most American-made automobiles. Furthermore, we think that over time, Tesla may be able to qualify for at least partial credits on some vehicles thanks to this. We also think that Tesla might gain from incentives related to solar, batteries, charging, and commercial vehicles. Third, limited supply of EVs encourages greater costs and earnings. Similar to earlier technological shifts, such as the switch from CRT to LCD TVs and feature phones to smartphones, Tesla predicts that consumers will progressively gravitate towards electric vehicles. However, as the new battery component supply and assembly require time to ramp up, the EV industry may face supply constraints in the intermediate future. Do you believe that purchasing Tesla stock now is worthwhile? Tell us in the space provided for comments below. Is it truly a smart time to purchase Tesla shares at this point? Although the price tag of Tesla stock may seem high, it might be more justified than what some investors may think. In fact, given the company's alluring attributes, a robust balance sheet, unmet demand for its cars, and explosive revenue, the price seems very fair. Yes, Tesla shares appear pricey at first glance when compared to other traditional valuation criteria like price to earnings and price to sales. However, there's a reason the stock is trading at such a high premium. Tesla undoubtedly has solid fundamentals. It will actually be challenging to exaggerate how appealing Tesla's fundamentals are. First off, the financial sheet shows $18.3 billion in cash and cash equivalents for the corporation. At over $7 billion, the trailing 12-month free cash flow is likewise noteworthy. This is an increase from just $2.7 billion in 2020 and roughly $5 billion in 2020-21. In addition, the business's sales are skyrocketing. Revenue for the last 12 months is $67 billion, up from roughly $32 billion in 2020 and $54 billion in 2021. And management anticipates continued robust growth. In fact, for the foreseeable future, management has directed output and unit deliveries to rise at a rate of almost 50% annually on average. Furthermore, demand is still strong despite some models' delivery windows for new orders on the company website being extended until April of next year. This suggests that Tesla management isn't playing games when it comes to their forecasts for sales growth. It's also important to remember that, despite reaching a notable annual income level, one could argue that Tesla is still in its infancy. The addressable market for Tesla has always been the gas vehicle market, not the specialized market for electric and hybrid cars. And this assessment of Tesla's addressable market seems more accurate than ever, considering how nearly all of the big automakers are currently heavily investing in electric vehicles. In 2022, J.D. Power predicts that there will be approximately 80.8 million vehicles sold worldwide. This is undoubtedly a year in which new car sales have been hindered by worldwide supply chain difficulties, highlighting how much more space Tesla has for expansion. Less than 1 million units were delivered by the company in 2021. Nevertheless, Elon Musk, the CEO of Tesla, stated at the business's most recent annual shareholder meeting that new automakers increasing their promotion for electric cars really helps drive up demand for Tesla's cars. Since electric vehicles are still in their early stages of acceptance, the main thing preventing sales from occurring could be a lack of information. Additionally, there is the possibility of Tesla's rapidly expanding energy industry. According to Musk, its energy division may someday challenge its automobile division. This is Goldman's overall investment thesis on Tesla. We think Tesla is well positioned to benefit from the long-term shift to EVs given its leadership position in EVs, its tight coupling of hardware and software, its ecosystem of charging stations, its brand, and its focus on clean transportation in general given its solar and storage businesses. In the intermediate term, as it ramps up the significant Model Y product and opens new facilities in Austin, Texas, and Berlin, Germany, we anticipate that Tesla will boost its margins in the long run. This will happen as it increases the percentage of revenue from software. In the world of electric vehicles, Tesla is a force to be reckoned with, even though not everyone may agree with this. Elon Musk, the CEO of Tesla, is optimistic that the company will continue to lead the industry in the upcoming years as it produces the eagerly anticipated Tesla Cybertruck and humanoid robot Optimus. For more content about Tesla stocks, don't forget to watch our other videos and hit the like and subscribe buttons.